Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Top Stock Picks. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks. And I'm going to look at one stock, then I'm going to hand it off to my colleague Andrew, and he's going to give you another one. So let's just jump right to it. My top stock pick for the week is Meta Platforms. That's META as the ticker. It's a Zacks rank number 3. That's a hold. It has an A for growth and a C for value. So obviously, you know, I'm an aggressive growth guy, so I love to see a strong growth score. But why is this stock a 3 right now? Well, the Zacks window for earnings estimates is pretty much closed. And, you know, Facebook or Meta, reported back here, as we can see on the chart. And then we've got 60 days from which any earnings estimate revisions are factored into the rank. And usually for a name like this, you don't see too many estimate revisions mid-quarter. So it's right after the quarter, analysts move their numbers. And then there's that dead zone, which is right about here. So you have that dead zone, and that's why it's fallen to a rank 3, because there basically are no estimate revisions, or not enough to make an impact. One of the reasons that the reason really is why I selected this stock is because it's going to report after the close on Wednesday, and we have the most recent estimate coming in about 4% ahead of the consensus. So that is a good indication of a possible beat. Let's take a look at the numbers that we normally love to see. So we first look at the earnings history. Does management communicate properly to Wall Street, a beatable level? And you can see for the last 3 of 4 quarters, they have 3 nice beats. That's what I like to see. All right. Are the estimates moving up? Let's take a look here. We've got 290. That was 90 days ago. So that was back at the end of last quarter. And then 353, and then just a little slight move up to 357. That's what we're looking for, 357. Next quarter, same story, basically, just a little tick up. For the full year, 1311 to 1339. We like to see that. Next year, good earnings growth, 1668 to 1683. Let's jump up and take a look at what's important to me is sales. You can't grow your bottom line unless your top line's growing, or maybe you got to have your costs going to 0. But right now we're looking at just shy of 14% annual growth this year, 13% next year. That's off of a gigantic base of $132 billion. Going to run up to $150 billion next year. Boy, oh boy, that's a lot of sales. All right, so what about our metrics here that we love to look at? Price to forward earnings, 23 times, and that is well below that Nifty 50 level. So you got to love that. It's an asset slim model here, Facebook, Meta Platforms. So 5.9, almost 6 times book, and you're getting 6 times sales. Margins ticked higher a little bit last quarter. So, I like that whole setup. Let's take a look at the chart, and you can see from the chart. Let's go back to the world's going to end, our pandemic. Nothing but net because everyone is using the internet. We're going there, but bad times in the tech industry, stock comes down. We've rebounded sharply despite the monumental failure that Threads was. Maybe still is, depends on what's going on there. But just the pattern. Let me get rid of my scribbles there. The trajectory of the earnings estimates here. I mean, straight up. So obviously cost controls are primary here for Meta. And I'm just going to jump over to this screen real quick. If I can. Can I? There I can. All right. This is our last, surprise thing, looking at where the stock has gone. So I'm just going to highlight this number, these few numbers right here, just above my little line there. So in the December quarter, the stock moved up 26% after the earnings, then 15%, then 5%. Right now, the options market is pricing in an 8% move up or down. So that could mean the stock's going to range as high as, like 330 in that range right now. And with the stock trading at around 311, 312 right now, it looks to be a great potential move. And I believe that Facebook's going to beat. I believe that we've seen advertising spending maintain or increase. So I am positive on Meta Platforms. It's META. Now I'm going to hand it over to my good friend, Andrew.
Hi, everyone. My name's Andrew Rocco. I'm a stock strategist here at Zacks Investment Research. I'll be covering our second segment of top stocks for October 23rd, 2023. My top stock pick for today is Zacks rank number 3 stock Cameco, which is ticker symbol CCJ. Cameco is one of the world's largest uranium producers. They're involved in the exploration, mining, refining, conversion, and fuel manufacturing stages of the nuclear fuel cycle. So the company mined uranium ore from several high-grade mines in Canada and the United States. After mining, the uranium core is processed to create yellowcake, which is a concentrated form of uranium. Cameco also operates conversion facilities where yellowcake is converted into uranium hexafluoride, which is UF6, a compound used in the enrichment process to produce fuel for nuclear reactors. The company supplies uranium products to nuclear power utilities worldwide, playing a crucial role in supporting the global nuclear energy industry. You can see the rankings up here from Zacks. And let's move on to the next slide. So AI is growing at an unprecedented rate. That's artificial intelligence, in case you don't know. Did you know that earlier this year, OpenAI, which is Microsoft and OpenAI's ChatGPT chatbot, it became the fastest growing consumer app in history. It gained 100 million users in just a few months. So to understand how impressive those numbers are, it took Facebook 4.5 years, WhatsApp 3.5 years, and Instagram 2.5 years to get to 100 million users. So this sort of growth is really unprecedented when you compare it to almost any other technology or app. So the artificial intelligence market is currently valued at 100 billion. According to Next Move Strategy Consulting, by 2030, the market for AI is expected to grow 20-fold to nearly $2 trillion US. So it's already grown a lot, but it's really anticipated. These consultants are anticipating that it's going to snowball from here on out. And AI is arguably the most complex technology to go mainstream. So due to the complexity of AI algorithms, the vast amount of data they process, the need for real-time processing, the iterative nature of training, and the continuous innovation in the field, the AI revolution relies heavily on back-end technology, which is data centers, to support this rapidly growing industry. So at this point, you're probably wondering why I'm discussing AI when this presentation is about a uranium producer. So let's get into that. Traditionally, operating large data centers requires a ton of energy and is expensive, inefficient, and not environmentally friendly. So traditional sources of energy are skyrocketing: electricity, oil, coal, while clean energy such as solar, it's come on, but it's been nowhere near able to kind of fill the void from those traditional energy sources. So nevertheless, most problems have a solution. And that solution is going to be nuclear. So Microsoft, the tech juggernaut at the forefront of the AI revolution, thinks next generation nuclear reactors can power its data centers and AI ambitions. And the way they're going to do this is through a small modular reactor, which is what you're seeing on your screen. It's called an SMR. And like the one pictured above, it's a compact miniature version of a traditional nuclear power plant. So it's a lot smaller, but it's going to put out a lot of energy for very cheap. And it's also going to be clean, compact, and a safer version of a conventional power plant, offering a way to generate electricity in a more adaptable and manageable manner. So how do I know this? A recent career listing on Microsoft's website suggests that the company is serious about its nuclear ambitions. Nuclear energy doesn't create gas emissions, And Microsoft founder Bill Gates has long been a proponent of the technology. And obviously, he still has a lot of sway over the company, even though he is no longer CEO. So if mega cap tech companies like Microsoft begin to implement SMRs, the nuclear industry and stocks like CCJ will have a whole entire new market to exploit. And I think when people continue to get fed up with the energy prices, the effects on the environment, I think the only solution is going to be nuclear in a lot of these cases, especially these small reactors, which are going to be more safe than traditional nuclear reactors. Now, beyond the potential for data center driven growth, geopolitical disruptions are limiting supply around the world. So, for example, Kazakhstan is the world's largest uranium producer at 45% of the world market. And there's an ongoing war right next door between Ukraine and Russia that may provide supply shortages, which, should that war escalate, it can potentially mean shortages. Meanwhile, France derives about 70% of its electricity from nuclear, and a coup earlier this year in the West African nation of Niger impacted prices for the world's largest nuclear energy nation. So at this juncture, geopolitical uncertainties seem to be expanding. Obviously, we've got things going on in the Middle East almost everywhere. So it's not decreasing anytime soon. And unfortunately, this should be a catalyst for nuclear and uranium. So obviously, we don't want that to happen. But as investors, we have to have no bias. We have to be cold and calculated and follow what's actually happening, not what we want to happen. Now, let's move on to the company itself a little bit more. On the screen, you're seeing CCJ's EPS surprise history. And Cameco delivered positive earnings surprises in 5 of the past 7 quarters. So they have a good history of surprising to the upside on earning, beating those Zacks consensus estimates. But what's even more encouraging is even after lowering production guidance last quarter due to challenges at 2 key mines, CCJ shares shook off the negative news and rallied over the past few months. So even when they've missed on earnings, the stock has been rallying. And that tells you a lot about the strength behind the trend, in my opinion. Let's move on to relative strength. So the blue line you're seeing on your screen is simply CCJ's year-to-date performance versus the S&P 500. So CCJ is up 64%, while the S&P 500 is only up a meager 11.3%. And relative strength is a simple yet powerful indicator. All else equal, I've found that stocks that have outperformed over the past year will continue to. In other words, strength begets strength. And in a tumultuous year like 2023, CCJ has one of the strongest and smoothest uptrends on Wall Street. So on your screen, you're seeing a weekly chart overlaid on top of a 10-week moving average. So after breaking out to 52-week highs earlier this year, shares of CCJ are retreating to the 10-week moving average for the first time since early August. What I found is that the first pullback to the 10-week moving average after a monster uptrend like the one we're seeing in CCJ, it's a zone where institutional investors tend to reload shares. So in other words, smart money who's been waiting for a pullback often waits for that 10-week moving average. So let's see how it acts around the 10-week moving average. We do have earnings coming up in a little bit, so that's something to be conscious of. If you don't like to buy before earnings, you can simply wait, see how those earnings go, and then maybe reassess the stock at that point. And finally, CCJ's cash and cash equivalents are growing rapidly, and they've tripled since 2020. So obviously, it's never a bad thing when the company's free cash flow is growing at the rate that CCJs are. So a lot of catalysts, really strong fundamentals and technicals. And finally, the AI revolution, just in conclusion here, it's rapidly transforming industries, which may lead to the need for more energy, cleaner energy. So we talked about the small modular reactors, which Microsoft is potentially looking to implement based on their job board. The shift to nuclear energy presents significant opportunities for companies like Cameco, Geopolitical uncertainties, wars, disruptions of supply are growing around the world, not slowing, unfortunately. However, that should be another catalyst for Cameco. So Cameco appears promising, especially during market pullbacks when institutional investors often seize on the opportunity to add to their positions. Thank you all so much for watching, and happy trading.